So hello active traders and welcome to this week's episode of Trading Week Ahead. We start off with a Win with Ken, quick 10-minute segment designed to help you develop better trading strategies and a focused approach that really makes sense. Now I hope that as we head into this week's Labor Day weekend, it finds you doing well and profitable in our current rally markets. We're at all-time new highs. Great time to be trading and making as much money as you can while giving back as little as possible in stop losses. In this week's episode of Win with Ken, we'll be looking at how to set your entries part 3 with the focus on adding to winners. But first, as always, all information is for educational use only, not making advice about to buy, sell, or hold. And by watching this, you do not make actual trades. I am the real deal with tax return proof that I've done as much as $4.9 million in real money trades in 1 year. Over the course of 20 years, I haven't added up how many more million it's been, but it's been significant, substantial. So I've got a lot of experience with proven entry and exit strategies that I've tested out that can help you. So our goal is, main idea, how to set your entries part 3. I want to teach you how to add to your winning trades. You should always be scaling in or adding to your winning trades. So we're going to be looking at how to do that coming up right now. Hey everybody, great to see you here. Oh no, thanks Phil, saying you like the 2 charts emails. And thanks Mukesh, hey, good to see you. Anyway, hit me up with the support ticket if any questions on anything. Let's get started though. Let's say that you're in a winning trade and it's starting to work out for you. And you're trying to figure out what's next. One of the things that I urge you to do as an active trader is make sure that you scale into your trade. So let's say, let me pick an easy chart here. Where's an easy uptrending chart? Always good to find things that are in the upper right side of the column. Okay, like Tandem. That's a good one. That's been a pick for my Swing Scans members the last couple of weeks. Congratulations if you too had made some bank on TNDM, the ticker. Okay, first and most important is, where would you trail a stop? So give some thought to that. This is the part where you write in trail a stop. But let's say you bought this on the way up. Now, if you had only traded, say 100 shares, let's say 30 and a half or something, you'd be up $1,500, which is cool. But if you'd added another 100 shares on the way up, you'd be up over $2,000, which is even better. So as an active trader, you should always be looking at every single trade, 100%. Every single freaking trade you do, you got to figure out where you're going to add to it to leverage up. That's a key component of effective trading. The trick in position sizing is, how do you manage the pullbacks? And this week's tip is, make sure that you add at a far enough away, high enough in the money, you're playing with Wall Street's money, area where you're likely to not get stopped out on a pullback. Because let's say with the chart with this kind of volatility, if you had bought just over 30 for your first trade and you added to it at say 32 or 33, you might have got stopped out on this pullback. So does everybody see the danger of adding to a winning trade? So let's say you got here and it's in the money. Yay, you're in the money. Booyah. Okay, but you add too soon. It's kind of like walking a fine line. You can't add too late. You can't add too soon. You got to add in a sweet spot. The way you do that is look at the point range. Okay, what's the volatility in this guy? This guy is 16 to 30. It doubled over the course of just 8 weeks. Okay, so with the chart this strong, you've got to use a wider scale in, or position sizing, as my colleague Dr. Van Tharp would call a position sizing, or legging into a trade, or building a position, or whatever. So the first tip is, do not add too soon as a function of the individual chart. So 2 points would be too soon to this chart. And with this kind of volatility, how many points would you add up? Or how many points would you wait? Let's say you bought this at 30.5, which is a very typical trigger of the type that I provide to my members. Let's say you bought at 30 and a half. And if you let it run, good for you, and you made some money. But you could have made even more had you added to it somewhere during the leg up. And so the question is, how far up do you want to add? And you may want to wait for a chart that has something like a 15-point range. You might want to divide that in 3. and maybe wait for 5 points before you add. Okay. One question that I frequently get, a frequently asked question on professional position sizing and trade management is, where do you set your stop after you add the second position? My answer is always break even. So if I bought at 30.5 and I bought at 36.5 again, so I bought 100 shares here, buy another 100 shares at 36.5, about 30.5, 36.5. The math question, and I know you guys how much you love math on a Saturday morning, right? That's what coffee's for. But let's say you bought 30.5, you bought 36.5. At that point, once you get the order fill, what I do is put in a break-even trailing stop. Where would your stop be then? I used to teach MBA courses and corporate training and development for Fortune 500 company clients, thousands of people around the world. So I always like to get you thinking on your toes. Okay, Dave. Dave's got it. John's got it. Other John got it wrong. John P got it right. John V not so much. Mike not so much. Mira got it. Yeah, somewhere around 33. You know, if you buy at 30 and you buy again at 36, what you don't want to do is get screwed and have it come back down to 30 or something, and the whole trade's a wash. What you want to, or you're in the red if it goes underneath that. If you buy at 30 and you buy again at 36. At that point, once you get the order fill, you tighten up your trailing stop to the midpoint, around 33, right? So that gives you a break-even exit. And to be completely honest, because I'm very honest about everything, you will frequently get break-even exits because not all the charts are going to go like this, right? Got some bad news there for you, Sparky. You don't get 45-degree angle breakouts month after month, but they're kind of like unicorns. They're hard to find. When you get one, that makes position sizing easy. The trick is, and one of the disciplined trading standpoints is, you have to use break-even exits after you put on the first trade, you put on the secondary trade, you put in a break-even exit. That will hit frequently, but the goal is to still keep after it and still keep at it so that the ones that do work out are more than worth it. And you make a lot more profit in the trade than you would had you just put on a single trade and let it run. Okay, so that's a good valuable intel tip. The other thing is, frequently asked question is, how many times should you scale in? And I would say no more than 2 times. So if I buy here and I buy 36, and let's say I buy somewhere over 40, which would be a very typical for me, a third entry. So if I buy 30, 36, buy 40, maybe 42, that would be it. You only scale in twice because odds are it's not going to keep running forever, you know, unless it's a Netflix or Nvidia or Disney stock. But for the rest of the 7,000 stocks out there, oftentimes you'll see a pullback at any point in time, at which point you go to cash. So let's say you've let the winner run and you're nicely in the cash. My last question this morning for you folks is, where would you trail a stop to lock in as much profit as you can on Tandem? Had you taken my alerts on the way up and you're nicely in the money, ka-ching, you're in the money. I love making money as a trader. It's what I live for. I love trading. I love teaching you guys what I've learned. But the trick is, like in life in general, it's not so much making your first million. The person that you become to make your first million is a much more focused, action-oriented, goal-oriented, you know, accurate person. But the trick is keeping a lot of the first million, not making a lot of money and then pissing it away on frivolous new cars and trips and bling and all that kind of stuff. And as a trader, your goal is managing your exits in a way that locks in as much profit more consistently for you. So my question is, where would you folks trail a stop? That's our last question before we get underway in about 5 minutes with our official broadcast. But for now, where would you trail a stop if you're long Tandem? This is the part where you type in a word or type in a number. There's no bad answers. Usually the tighter the exit, the smarter and more accurate and more successful the trader. It's just a quick tip. It took me a lot of years to learn that. It's not about horizontal support resistance. It's about profitability. You can quote me on that. Take that one to the bank. It's very accurate. Horizontal support and resistance is great if it worked 100% of the time, but it doesn't. It works out minority of the time. So for that reason, you got to use a little more street smarts in what you're trying to do. So where'd you guys trail a stop? I'd love to hear your answers. Go ahead and type it in right now, and I'll read off. Wow, it's in a long scroll of them. I'll try and read off some of them. Excuse me while I drink my sip of Obligatory sip of coffee. Caffeine is a trader's friend. I got, okay, under last bar low, 41, 42, 44, 41.80, 49, 43.70. Seen all kinds of answers here. 41, ATR below, 42, 37, 31, 38, 42, 42.70. Well, thanks everybody for posting. I would sell this all under 44. Why give back your money? Why give back profit? If I'm in the money this far, because I can always rebuy over, say, 48, or in the case of this one, I would wait, for a next entry where I scaled into this guy until it broke over, say, 50.5. So for that reason, I would trail a hard stop on this guy at 44. You kind of zoom in on this chart on the 15-day chart, and see that puts us out right here. So that would just be a reversal of the previous day's high. It's a rock star chart, and it may keep going up. But one of the things, and you have my word on this, it's very important you get this right, is a professional breakout trading strategy, and you should write this down. Selling early, selling often, because you can always rebuy a new high is the mantra of what I've taught so many tens of thousands of folks over the last 20 odd years. You can always rebuy a new high. So don't worry if it runs to 80 without you, because you'll get back on board somewhere over 48, somewhere over 50, right? So squeeze out as much profit in these trades as you can. Once it runs up in a nice healthy move, the thing that I don't like about this particular candle, it's not qualified yet to be a shooting star because it doesn't have a tall enough upper shadow, but it's a smaller candle. It's still an uptrend. It's still a long play, but if it drops under 44, I'd go to cash. With the thinking I can always rebuy over that box range, 44 to 48. I can always buy if it flips up over 48, say 48.5. Okay, so that's another strategy. So anyway, thanks for the comments. Wow, a lot more here. Dave saying extended. Yeah, but if you remember, or stocks like Square. Remember Square. I don't issue buy alerts for this guy anymore. I used to back in the 30s. Now it's up in the 80s, 90s, right? SQ. What a chart. Bling. This is one, by the way, I mentioned in my the Bitcoin Bonanza course. So if you bought and ordered Bitcoin's Bonanza back when I released it, back at the first part of the year, congratulations, because SQ is one of the top picks for that particular course for Bitcoin. It's a Bitcoin play. And it's been a rock star chart ever since. So how much money could you make if you traded this on the way up? It only, I don't know, tripled from 30 to 90. Smart traders want to trade. I like to trade charts that do things like this, that have good volatility. Right? The point range is so important. And more importantly, or I won't say more importantly, but a systematically, strategically important tip is that you need to have a consistent chart with the volatility. What you don't want is pop and drop, like the cheap stocks that pop up and drop right back down again. That's no good. That'll blow up your account. What you want are charts that have sustainable trend strength that makes sense. So anyway, friends, we're almost ready to get started with this week's live event, but was that helpful so far? I want to give you good, honest content without any big sales pitch or anything. I want to get you up to speed on the right thinking, on clear-headed, intelligent, focused thinking. At least from my own millions of dollars worth of real money trade experience the last 20 years, I've learned a lot. And I really wish I could go back in time. Where's my TARDIS? If only I had a time and relative dimension in space TARDIS for the fellow Whovians out there, and I could go back in time, this is exactly what I'd be telling my younger self. So I hope that I could help you make bigger winning trades more often and more consistently a way of life. Bum, 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 bum. Anyway, let's get the party started, to quote Pink, who is a great singer. And we'll look at the 3-month, the 90-day, 3-month chart on the S&P. So with that, let's go ahead and get this week's broadcast started. So that was the Win with Ken episode. By the way, tell me, shout out right now, if you like the Win with Ken, that I show up here early, like 15 minutes ahead of time, to give you some good value-added professional trading content. tell me if you like it. You hit me up with a why or yes or like it or tell me and I'll continue. And if I don't get a lot of those, then I won't. It's up to you guys. It's a team effort here. Anyway, but thank you. Wow. Love it. Great tips. Outstanding. That's great. All these. Wow. Thanks. I've seen all these scrolling on by. Thanks, everybody. Appreciate it. I work hard because I've learned a lot and I hope that it can help. So, all right. Well, thank you so much. I appreciate all the kind words. We will continue it. Getting better all the time. Thanks. Really appreciate it. Focused and to the point. Thanks, Shannon. Yeah, I agree. I've seen a lot of rambling webinars out there, and I don't want to be one of them. I want to be focused and action-oriented. So with that, let's go ahead and get this week's broadcast started. Welcome, active traders, to our Trading Week Ahead episode for today's Saturday, September 1st. It's a Labor Day weekend, so let's celebrate working our collective asses off. That's what we do. We work really hard. I don't play hard. I work hard, and then I work harder. That's kind of the tip to being really successful. Work all the time you work, be focused, action-oriented, in service of other people in a way that genuinely helps them. So that's kind of my mantra. Anyways, always, all information is for educational use only. Not making advice about what to buy, sell, or hold. And by watching this, you agree to not make actual trades. Bum, 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 bum. Use a demo account. Quote of the week from a man who I have a tremendous amount of respect for, Winston Churchill, who said, if you're going through hell, keep going. You got to keep pushing yourself, all right? The only crime of falling down is not getting back up again, dusting yourself off and trying again. The way to do that as a trader is to trade itty-bitty share size or lot or contract size so that you got a lot of what one colleague would call occurrences, or a lot of shots at the market, a lot of darts you throw at the market. The ones that work out, like I said, you scale into, you add to the winners, feed the winners, starve the losers, and make the math all work out on the back end. It's all about, it's a big, huge, freaking mathematical puzzle. That's what trading is. It's not gambling. It's trading strategically with a lot of math behind it in a way that makes you money more consistently than not. That's the goal. Our coaching tip of the week, a quick tip before we hit our charts. This is volume patterns, part 1. And the first tip is I always like to look for at least a 30% increase in volume. What I do in my own trades is what I will do is I will echo, or to use an NLP term, neuro-linguistic programming term from Bandler and Erickson, mirroring or matching. So if I see a lot of volume come into an instrument that I'm looking to trade, I will also up the initial share size. I'll up the ante if I see traders are voting with volume. So if you see 30%, let's say yesterday I traded, let's say, an even million shares, and today did 1.3 million, then tomorrow, if it keeps going up, I will likely add to my trade or start off my trade with a larger share size than I otherwise would. Or day trading, minute over minute volume. If you see, say, 20,000 shares 1 minute and it goes 26,000, doing the math in my head here, 26,000 shares the next minute, that's likely a good breakout candidate. Okay. I got 2 more tips, and those will be shared with my Swing Scans members in around 25 minutes. So if you're not yet a member of that intelligent, focused group of active traders, do be sure to join Swing Scans. Thanks to all of you for making this #1 in the, well, at least one of the very top, I should say, in the industry. 5,400 of you registered, reaching 5,500 resistance at one of these days. I got to celebrate. Anyway, y'all have been amazingly supportive. I appreciate it. Let's start off by looking at our S&P. And obviously we're in an uptrend. R1 is 29.22. Okay, you notice last week my call nailed it on the way up. Next up, 29.22. So I'm not going to go aggressive in. I may do small share size on bounces, but I'll wait until we get over the 29.22 and a technical resistance level. See if the market can poke its head over 29.22, which it may well do with this strength, right? As the R1 level. S1 level down here, 28.68 is in my notes. 28.68, and that would be a 5-day low. And that's another quick tip, by the way. When you have an especially strong chart, you can always use a 2-day reversal, but a 5-day is smarter for a counter trend because it has so much underlying strength in it. You don't want to go counter trend and catch a falling knife or do it the wrong way or try and do a pivot trade too soon. So 28.68 is S1. Okay. Now let me give you a couple of charts to ponder. Some charts that make sense to look at. our first one, and this is one of the 10 picks that my Swing Scans members gets, and I will share it with you here as an example. This is not one of the best ones, but it's still a good one to pay attention to. TLYS is in Tango Lima Yankee Sierra. TLYS, the ticker. I have no idea what this company is. Tillis Inc. That intel added exactly nothing to my strategy as a trader. I don't care about the name of the companies. I'm one of the original .com day traders. Like Greenspan used to say, all we care about is mystical symbols. We don't care about the underlying fundamentals or the PE ratios or the long-term prospects. No, I just care, can I hustle some money out of the chart? Can I make $600, $800, $1,200, get my nut, walk out, and I'm done. Wham, bam, thank you. We out. Peace. Anyway, nice big run up from just over 20 up to 25 yesterday. This is also a good candidate for day trading, by the way, and I will be covering this one in my live room for my Trading Open members, of course, because we like charts that actually work. What a novel idea. We don't like $3 stocks that chop and drop. We like stocks, I love stocks myself that I like to trade that have at least a 2-point range, and this guy's a 21 to 25. Gives us 4 points of volatility to profit with next week, right? If we have up to 4 points, if we got that kind of repeated volatility in our next week's markets. Also, for experienced traders, may want to consider this guy for a swing trade up at new highs. But it's got a gap continuation. It did a mean reversion gap fill. It gapped up here, pulled back down to 50% retracement, also known as a mean reversion, and then it continued to skyrocket on up. And you may have seen my articles in Stocks and Commodities magazine, which you all should be subscribing to, by the way. Technical analysis of Stocks and Commodities magazine at www.traders.com. I've been a monthly columnist for years and love contributing there because it's a great way to share techniques with a broad audience. Anyway, the point is, mean reversion pivot in TLYS continued to skyrocket up yesterday. Eyes on the prize. Keep an eye on this puppy next week. For those of you, I got a couple of cheapies this week for you that, for those of you who trade, this is a mean reversion pivot play in SSC. Okay, this is one that I had alerted my small cap scans members to as well. It did a gap, mean reversion bounce here, then another mean reversion pivot here, right? It ran up, pulled back down to half, did a little bitty bounce here. The cut pattern didn't quite hold, so it's pulling back, but this has lots of volatility. You may want to see my most recent episode of my Trading Television video on YouTube channel, my most recent vlog, episode 43, on wide trading ranges. This is an example of a wide range cheap chart. So if you do trade these relatively risky, dangerous cheap charts, ones with wide ranges are good, ones with consistent trends or bullish patterns are better. And this guy has an ascending triangle. And this is also one of the picks in my small cap scans advisory service. You can see, well, actually shooting star here, so let's move this guy up here. Anyway, an ascending triangle, right? That's a classic Western technical breakout pattern if it's able to break over the whole number. If it gets north of 6, GERN may make sense, so keep an eye on it. From oil and gold, I don't see a lot going on in the gold sector that's worthwhile. Dust is trying to bounce again. I tried to buy this earlier on its initial breakout. I got stopped out last week. I will rebuy, but not during this bounce. I'm going to be once burned, twice shy. So a little itty bitty trade, so I don't care about it. But I will wait until it gets well over 43.5 before considering a long in dust. But I don't see a lot going on in gold for the next week, so be careful. What I do like is oil. Our oil sector has been on the rise. As you may have noticed at the local gas station when you pump your gas, does everybody see that the gas price is going up? When the gas price is going up, I want to get paid. I always look at things kind of the opposite of the retail public. If I see an especially strong trend, I want to profit from it. I'm a trader. It's what I do. I try and take money out of the markets. I've traded millions worth of stocks and other instruments. I know how to trade. So I want to get paid. So if I see, I don't know if it was some famous person, I don't know if it was Warren or somebody said, you know, you'd want to trade what you like or something. If I see an outlier data point, like the prices are spiking at the gas pumps, I'll pay keen attention to the oil stocks. And I'm long USO and UCO right now, so I want to scale in. Here's another quick tip. Where would be a smart scale in trigger for this guy? Because you should be anticipating a potential reversal or at least a slowdown or a stall at 35 in UCO, because that's a 90-day high. And as any professional trader will tell you, 90-day highs are often a good exit zone or target zone to sell into. So if my current long runs up to 34, maybe 34.50, I may well sell right here and then rebuy if and only if, IFF, for those of you who remember your math, if and only if it breaks north of 35.50. Okay? Always have exit targets in mind. Always sell into previous resistance areas, or at least tighten in trailing stops if you're trying to play position play. But for those of us who like shorter term 2 or 3 week swing trades, if it's getting close to prior resistance area, I'll often tighten in a stop to a buck or two at the most under current support to get me out with a profit before it stalls and then drops back down again. Now, on the other hand, if it goes sideways, that's fine, no harm, no foul. But if it keeps skyrocketing on up, I will always re-engage. I will rebuy a new high. So I sell into resistance, go to cash if it pulls or chops, which it usually will, and then rebuy if it slingshots on up to new high breakout. Okay, and that's a good profit extraction method to do it as a trader. Right? You may have seen examples of my real money trades at tradingtalk.com, my forum. And anyway, the point is over 130,000 views on that thread. I think everybody's kind of curious, what does a real trader look like? And I do have examples as recent as this year, for those of you who are asking. Some people think just because I show a tax return from 09, I traded last week, all right? So I'm an active trader. I trade all the time. I just don't take time to document every single trade I do for the world. I'm running a very expanding business with so many new subscribers. But anyway, the point is, sell into resistance. Rebuy a new high. What else do we have going on here? For the world's currency traders, the dollar CAD looks to be the best of the charts out there. US dollar to the Canadian dollar, we're getting up to the previous resistance area. If you are a currency trader, be sure to check out www.forexvideos.com, the site that I run in concert with my colleague Peter Bain. And there's a subscription service. We got 3 alerts each week for those of you who are currency traders, plus downloadable videos from our live Las Vegas seminar and various webinars we've done over the year. Anyway, it's reaching resistance. I want to wait for it to break above that, but the dollar CAD's been really strong lately. So what have you done for me lately? Well, let's see if it's able to continue to skyrocket on up to new highs as well. So for Forex traders, dollar CAD looks to be the best of the swing trading charts out there. All right, what else do we got? Let me give you some free stuff. I've got a free Trading the Open live room open house coming up Friday. And I do these only once every other month. I'm really busy, so I don't do these all the time. But once every 8 weeks, I will do a free event. There's a link. If you're not yet registered for that, do that. We're up to over 1,000 now. But anyway, the point is, it's free. It's Friday. Come join the party. See how many winning alerts we can get together as a team. And often, also too, for all of you, I got a huge number of people in my as regular paid members in my regular room session. You folks, of course, are always welcome to attend the free open house events too, because you know how good the alerts work out in terms of performance and the training quality of live real-time look over my shoulder and see what's going on with breakouts and mostly gap continuation charts. You're welcome to show up and add your 2 cents worth, add questions or comments as well. So if you're one of my valued regular members, thank you. You're also welcome to join the open house. That was our winner of the week from the 30th, which was day before yesterday, GES. Nice big run up. This is a classic bullish cup gap with a bullish cup breakout, and buying right above the high there made sense. It ran all the way to the whole number 27 before the pullback. That's another core strategy I teach at Trading the Open, is whole number resistance and support levels in concert with gap continuation momentum runners on high volume. And so look at this volume, right? What a chart. Hey, also, I do have an archive. This is a new feature I just added. Was it yesterday or day before yesterday? Is the previous winners of the week. And the reason that I'm going to start doing that is I want you to see examples of the right kind of charts that you should be day and swing trading. These are examples for day traders for trading the open. Another quick tip, I've got tours that I added. A quick automated tour that you can take that shows you different parts of the website and explains things. So I added that last week. I've been busy. I work my ass off. And I got another tour with another confused looking person for swing scans. If there's mostly for people who are new to the service or new to the website. There's a tour and it explains some of the different features that are available for you there. And you know, we like charts like this one, right? So I like directional volatility, charts that are most likely to make money, that if I could go back in time I'd be up a lot, and price projecting forward to the right side of the chart. There's really good trade setup and directional opportunity to work with. So I like good odds charts. Like being a Vegas odds maker, you want charts that if you were to lay odds, you'd be on the plus side of things, not on the minus side of things. And I've also got a winning chart archive of maybe 8 charts from the last couple of months worth of alerts, the ones that did extremely well for us as well for you. So anyway, and that one also has a tour and much more. So anyway, a lot to work with. One of the things I think can help you, especially when you're looking for volatile breakouts, is be keen to play the charts that have consistent large runs and also have enough point range to make the math work out. So for example, as a swing trader, you should be looking to make, you know, at least $500. Why? I shouldn't say that. It all depends on the individual trader. For myself, I like to go for a swing trade with the upside potential of at least $500. And the way I do that, and I'll tell you right quick here, we got just a couple of minutes left. Your exit target should be around 50%, around half, kind of like a mean reversion or 50% Fibonacci projection, 50% of the 15-day chart. So what that means to you and I as a trader is you got to have charts that have enough range so that if you get half of that range on a winning trade, it's the math and the numbers and your profit makes sense. If it's only, you know, like a crappy chart like AT&T, which I've picked on for 20 years because it's the worst chart in the whole stock market, in my humble opinion. Anyway, look at this. This guy is 32 to 33. It's got a 1.5 point crap range. Why on earth would anyone trade this? I have no idea. But yet there's people out there trading AT&T. Charts like this, on the other hand, have 17 to 25 is 8 points of range. So with an 8-point 15-day range, that yields a 4-point target. So if I buy 25.5, I'm fine selling 29.30, right? Around 29-ish, selling the 29. That's 4-point exit target. So roughly 50% of box trading range of the 15-day high-low is a good price projection for an exit target. And so what that means, like I said, is you need to trade charts with big ranges. It all has systematic implications for professional trading, and you need to understand the math and the mechanics behind the charts in a way that makes sense. And the other thing I'd really like to ask for your guys' help with, if you found this valuable, is another free thing. I like to start, by the way, how many of you like the fact that I do these things for free and I'm not charging and I'm giving you actually good intel and good professional, like this is exactly what the approach that I take when I teach at the Money Show events or in my Stocks and Commodities article. I like to give you good, honest, free content without some crappy sales pitch or derivative. Buy my magic indicator software. Instead of $1,000, it's only $800 for 20 minutes only. You too can be the next winning bajillion. Raise your standards. There's so many crap. Anyway, but I said I wouldn't talk bad about other people, so I won't. But the point is, I hope that I can be of help to you with the content. Wow, thanks. You get like 70, love it. Look at 10 and 2. Thanks, everybody. Appreciate it. Wow, appreciate it. Good value. Thanks, Ken. Great content education. You bet. I appreciate what you do. From a chief accountant saying yes. Thanks, Erdo. Like it. Thanks, Walt. On sale for only $2,000. Yeah. Never buy anything from people that are charging like $2,000 or $3,000 for a trading course. That's a bunch of horseshit, right? Or pardon my French, that's a bunch of horse manure. I think that's stupid. I think courses should be, inexpensive, and if you like them, you can buy more of them. That's my model. My downloadable courses start at just $27. Okay, so really cheap. And I have free preview clips you can see for a lot of them. I'm trying to get the try before you buy preview clips for all of them. I got so many courses I've developed over the years, but that way you can buy courses kind of as you wish, and without spending $2,000 or $3,000 up front for a course. I think that's ridiculous. That's greedy. That's unethical. I don't think that's smart. I don't think people should encourage that. I think you should be able to engage with an educator for free on the front end, and then very little money. Maybe it adds up over time, as it should if it's adding genuine value to your life, right? So I hope that I can earn your trust and earn your business over time the right way, starting with free. Anyway, speaking of which, if you guys would do me a quick favor, do that survey I just sent a link to. I also just posted it in my Twitter feed at twitter.com/Ken Calhoun. It's the most recent tweet. Take a look at the SwingScans website and do the quick one-page survey I've arranged for you. And if you do that, I'll give you, at the end, it sends you to a GoToWebinar link for a free Swing Trading Breakouts webinar I've got coming this Wednesday at 7 p.m. Eastern. And that's my thank you, kind of payoff, paying you guys for your feedback. So if you would, do the survey and I'll give you a free webinar coming up this Wednesday. So I always like to give before you get, right? Always have a handout with something that makes sense to give people before asking anything in return, right? So the golden rule, that's how I'd like to be treated. Well, thank you so much for all the comments. I wish I could answer all of the questions. I've got to run because I got SwingScans coming up, but I wanted to thank all of you for being here. And yeah, just a reminder, Monday the market's closed. You too, have a great Labor Day weekend. I love the strategy to sell at resistance and buy in the breakout. Yeah, sell into resistance, go to cash, then rebuy at a new high. The flip side of that, kind of a risky business type of a play, which is one of my favorite all-time movies with Tom Cruise. Sometimes you just got to say, what the heck? The point is, for pivot plays, if something is run down sharply, boom, and it's starting to bounce, you can buy right at that zone and then put a protective stop. And if you're clever, you could put a sell order in that's enough to not only stop out the initial position, but simultaneously flip you short if it loses support. That's kind of like a squeeze play on a reversal. And so that's another strategy that I cover on occasion in the live room. So for example, 20 is likely support here. You could like buy something here and then put a stop loss at the 20. And that way, if it does keep going down to support, you take a very tiny stop if you're wrong. But if it bounces, you might get a point out of it, or 80 cents to the upside if you're right. So that's another strategy, when you're looking for these kind of charts. But, play the field out there. Play charts that make sense, that have good ranges. So I've got to run. I got SwingScans. You guys have been great. Thank you so much for the kind words. Do participate if you want in this Friday's free Trading the Open live room open house. The link is on the top side of the website at www.tradingtheopen.com. And please do the SwingScans survey to help me improve it. I've been working, by the way, on both of those sites a lot this last week. I don't know if my eyes are a little red because I've been putting in burning the midnight oil, trying to improve the websites, but they are less cluttered now and more streamlined and easier to navigate, because I realize so many people are on mobile devices, on cell phones and tablets and whatnot. That's important to reach, especially folks who don't have big, huge multi-monitor systems to view websites in. So anyways, thank you very much for your help. I appreciate it. Until next time, trade with passion, or at least intelligence and street smarts. Trade with itty-bitty tiny stops. Rule number 1. Play the field. Let's go get them. Do well in your trades, and I'll see you guys next time. See you next Saturday. Take care for all, and I'll see my SwingScans members in just around 5 minutes. So if you're a SwingScans member, see you in a few. Bye for now, everybody. Have a great week ahead.